Hey guys, what's up? This is Francisco with Valareso Capital, and today I'm gonna bring you the weekly watch list for the week of the 14th of February 2022. First of all, happy Valentine's for all of you guys out there. I hope that you have an amazing time with your loved ones, and let's just get into the charts. So here I have the NASDAQ composite in my screens. And we can see clearly that we have been on a really strong downtrend below the key moving averages. Right, we're below the 50 daily moving average, and right now we are below 200 daily moving average, and of course we're below a 21 exponential moving average, and we are below downtrending 8 exponential moving average as well. As you can see, I did some measurements of Fibonacci retracements, and we were unable to close. Well, we were unable to close consistently above the 0618 level. For you guys that study Fibonacci, the 0618 level is usually a really strong level of support or resistance, as we can see here on this chart. If we just use basically trend following and basically just some basic um technical patterns, we can see here that the IC came down, and right now it wedged and is breaking below a bear flag right here. So this is actually a pretty bearish pattern. We close near the lows. We have a really strong move to the downside on increasing volume, and we shoot the expectation for this pattern. Even if we bounce to the declining exponential moving average, the expectation from this pattern is to test these lows and perhaps even take them out and continue to move lower. We of course we could see some change in sentiment, and perhaps we can see the Nasdaq Composite moving higher, but we have to trade the chart that is in front of us, and the chart that is in front of us is a bearish chart, so we have to trade it in a bearish way. So the expectation is that the Nasdaq Composite is going to continue to move lower, and that means that the path of least resistance for the majority of the stocks is going to be lower. So now let's move into the weekly watch list. As always, I have five names for you guys. I have 5 names for you guys to take a look and to add them to your watch list and perhaps take trades on them. So I'm going to start with Apple. And as you can see, Apple here, the pattern is really interesting in Apple, right? We had kind of this double top right here. We had this bearish cross. We had a really strong move to the downside. Then we had a really good earnings report. We had a strong move the next day. And of course, what's happening right now, we are in an environment that it doesn't matter if the earnings are good, right? We basically came up here into this supply technical level. And basically what happened with Apple basically saw a lot of distribution right here above this 50 above this 50 daily moving average. But what happened, right? We had basically this move right here on declining volume, and then we had some selling on higher volume, and then we had a break of that 50 daily moving average on increasing volume. So what is the expectation? The expectation is that bears are in control, and we're going to see lower prices in Apple. My expectation is that Apple is at least going to test this low, and perhaps we are going to fill this gap right here that we have from earnings, and perhaps we're going to come all the way to 159. I think that the way that you can trade Apple right here is that you can use a daily close above this level as your stop, and you can target a move down here. So always keeping a really tight stop, looking for a high reward to the downside in Apple. Now let's move into the next name. I have Adobe. And we can see Adobe, right, that the path of this resistance in Adobe continues to be lower, right? We see here that we had the move below the 50 on increasing volume after earnings. We had a gap down. We had a move into the declining 8. And then we just continued to move lower, right? We had a couple of closes above the 21, but of course in declining volume. And right now we see that we had a bounce into the declining 21 exponential moving average, and now we're seeing more selling, and we broke down below this level on increasing volume. So I think that Adobe, best case scenario for you to take this trade is if we get a move up into this supply level, technical level, and then you target a move to the 1272 extension to the downside, or even to the 1618 move to the downside. the paddle list resistance in Adobe continues to be lower. And of course, you can use this declining 8 exponential moving average also to track your stop and continue to target more downside in Adobe. Now let's move into the next name. I have ARK, right? And we can see, right, that ARK, this is a kind of a bear flag right here. We had the strong move to the downside. Now we have the wedge action to the upside, and of course we were unable to close above this supply technical level. And right now price is moving to the downside where we got rejected. Basically, we had a move up, a bearish close, a bearish daily closing range here on increasing volume. That's selling. And then we had some continuation, a fail at the 21 exponential moving average, and now we're starting to close below this trend line on increasing volume as well. So I think there's a high probability of ARK moving lower into this 1272 extension, which happens to coincide with the breakout level of 2020 right here. So I think that's a really interesting level for a target for a move down in the ARK ETF. And I think you can easily use a daily close above this level as your stop, looking for a high, for a low risk, high for a low risk trade and high reward trade here in the ARK ETF. Now let's move into the next name, which is CRM. Basically, CRM is really similar to the pattern that we see that we mentioned in Adobe, right? We continue to see more downside, right? We saw a lot of distribution after earnings. Adobe continues to trade below a declining 21 exponential moving average. We saw that Adobe tried to move above this exponential moving average on this day, and we see that we had a lot of rejection on higher volume in Adobe. And basically, this candle right here reaffirm that the pattern list resistance in Adobe is to the downside. And of course, I think that you can use this 8. If you're lucky, we probably get a bounce into the declining ADMA. You can perhaps take your trade right there and look for a move into the 1272 or 1618 extensions, measure from this move right here into this move right here as your targets. So always try to get your field somewhere around these levels so that you can get a low risk, high reward trade to the downside in CRM, which is Salesforce. And now moving into the last name that I have right here, I have Microsoft. And you can see that I have a lot of bearish trades in technology. And we can see that the path of least resistance of technology continues to be to the downside. And that's where I think that you can put some of your money to work. And in the pattern here that we see in Microsoft, right, we had this really strong move to the downside. We have this follow through day here. We move up here above this 21, but of course we saw a lower high. We basically saw these moves on declining volume, and then the rejection and the follow through of that rejection came on increasing volume, and now price closed below that 200 daily moving average. So I think there's a strong probability that Microsoft will continue to move lower and perhaps even take out the lows of this follow through day right here. Now, how do you manage this trade? Of course, try to get your field as close to this declining 8 exponential moving average, or perhaps you can take a starting position somewhere around this 200 SMA, targeting first a close of the gap that we had on earnings, and then perhaps a move all the way to the down to this low right here, trailing your stop using the 21 exponential moving average and the 8 exponential moving average right here. So that's basically all the names that I have for you guys. Once again, the pattern list resistance continue to be to the downside, so I don't think there's any reason to try to play these to the upside. I did try to play to the upside last week, and basically I got stopped in all my trades, and I had a small win. I had a winner on apps, but then basically I got to stop in some of the bullish trades that I had in Microsoft and on ARK. And I think that we as traders we have to adapt, right? So sometimes we just get stopped into in a trade in that we were looking for the bullish side, for example, and then we have to realize that there is potential for more move to the downside, and we have to adapt. We have to trade the chart that is in front of us, and we have to always look at ways in which we can make money in the market. And if you are not sure which way is that way, the best thing that you can do is basically just sit on cash and wait for better conditions, which are not as volatile as the ones that we are seeing right now. So basically, thank you so much for guys for watching. Uh, don't forget to like and subscribe. And of course, if you have any names that you want me to watch, to take a look, send me the just mention that on the comments. And thank you so much, guys, for watching. Hope this video is helpful. And let's see what the next week has in store for us. So thank you so much for watching and have a good evening. Thank you so much. Bye bye.